What's up, everyone, and welcome back to another video. In today's episode, we're going to be talking about Chime Stock. We're going to look at their most recent earnings report, which was Q3. We'll look at some of the key highlights. We'll look at their presentation that they presented, and then we'll look at some fundamentals and what things are looking like quarter over quarter, and then what analysts are expecting in the coming quarters. And then we'll also look at the charts, go over some technicals to ultimately try and decide whether or not Chime is still a good buying opportunity after their most recent earnings report. So let's jump right into it. First, let's take a look at their Q3 earnings and compare it to what analysts were expecting. So you can see their revenue came in at $544 million, which was a beat. Analysts were expecting $543.5 billion, so a barely beat. I mean, not by a lot, but nonetheless, it was a beat. And then you had net loss, which was a net loss of $55 million. So they're still losing money, quarter over quarter, but the loss was better than what analysts were expecting. So they came in at 4 cents per share. And so obviously analysts were expecting something more than that. So that's good, right? It's progress, not yet profitable, but ideally they'll be hitting that curve here soon. Let's see, we have platform-related revenue. Let's see, it grew 65% to $180 million, surpassing the average analyst estimate of $168.98 million. So that's like one specific segment that was really showing some good growth. And then this is another thing I wanted to point out too: the guidance. So this is typically really important, right? A lot of times when companies come out, they could crush earnings, double beat, and then they give bad guidance, pretty much saying, but because of tariffs or because of this or because of uncertainties, because of interest rates, whatever it is, right? We feel we're going to lower our guidance for next quarter, right? And analysts and the market hates that, right? Investors hate that. But in this scenario, you can see here that Chime actually raised their full year 2025 guidance. So let's see, they raised it to $2.163 billion to $2.173 billion, surpassing the average analyst estimate of $2.15 billion. So not a huge raise, but nonetheless a raise, right? And they're already seeing decent growth with revenue and all that. So this is good, right? This just shows that, hey, things are looking a little bit better than what we were originally expecting. And typically when companies guide higher than what was expected, you see that in the stock price. We'll go over the charts here in a little bit because when Chime came out with earnings, nothing really happened. And then the market was selling off, so Chime sold off. But again, we'll jump into the technicals here in a minute. With that being said, let's go ahead and take a look at their Q3 presentation that they presented during their Q3 earnings call to go over some key highlights. So here is Chime at a glance, right? So some things that they're the market leader in from this quarter, right? Number one in destination for consumers earning up to $100K, switching their direct deposit relationship. Number one share of new checking accounts, according to JD Power, and number one bank brand, according to the Times. So these are some pretty substantial milestones for Chime, and it shows that they're doing something right. And then let's see, deep member engagement. So majority of our active members rely on Chime as their primary financial relationship. Deep, long-lasting, multi-product relationship monetized primarily via payments. So this is great, right? This is something that SoFi thrives in, and that's the multi-product relationships, right? So in other words, when members get into Chime, right, when they become a member, they tend to use other products, right? So it's, in other words, Chime is just really upselling, right? They come in, they create a checking account, super simple. Next thing you know, they're adding this, they're adding this, they're adding that. And of course, that's good for Chime, right? So I like to see that. And it looks like, the fact that their members are solely relying on Chime as their primary financial relationship. In other words, not going to other platforms or whatnot to get what they need. They're finding everything they need with Chime. So that's great. Let's see, proprietary tech platform. So Chime Core, our proprietary transaction processing core, and Ledger has accelerated product velocity, including new Chime Card, Chime Plus, membership tiers, instant loans, and outbound instant transfers. So, hey, that's something that differentiates them from other competitors, right? You always like to see things that are proprietary because that means just Chime is the only one that has that, right? Obviously, someone could make a knockoff or something close to it, but that's good. I like to see it, and it's a good way that they're differentiating themselves from competitors, right? Like SoFi. Let's see. Large market opportunity, all right? This is great. $426 billion, right? That's the market opportunity. We want to see that as well, right? We want to know that, hey, Chime is on the ground floor and there is so much more growth available, right? Like, obviously they have to execute, they have to do their part, but the market share is there, the market opportunity is there. They just have to execute, right? Now, if they told me that this was like, hey, the market, opportunity for this is 1 billion, it's like, well, damn, they're already there pretty much, right? It wouldn't be too exciting. So that's a good thing, right? I like that. And then moving down, strong financial profile, so growth and scale. $544 million in Q3 of 2025. That's a 29% year-over-year increase. That's not too shabby. Let's see, adjusted EBITDA margins improved year-over-year, and then they raised their outlook, as we mentioned. Always like to see that. All right, the next slide. Sorry if my picture is cutting some of this off, but we're going to touch on the most important things, right? So just the momentum continued into Q3. So strong active member growth. You had the Chime card makes fee-free banking more rewarding. People love that, right? I personally love cashback cards. So I think that's definitely a good way to keep clients coming and to keep them, with Chime. Let's see, over 50% quarter-over-quarter increase in MyPay transaction margins. That's pretty nice. And then we have OIT adds member convenience at a higher monetization. That's good to see. So OIT is outbound instant transfers, grew to 640 million. Chime Enterprise continues to gain traction. Of course, right, that this is good. Some strategic partnerships, right, with Workday. I mean, it's a pretty big company. 3 new employers, partners as well. So they're continuing to grow, right? They're adding partnerships, and it looks like it's starting to pay off, right? Arguably, maybe they're not seeing that, really pay off substantially, but they're gaining traction. Of course, that's what we want to hear, right? The last thing we want to hear is, hey, these partnerships that we have, they're not really working out, right? And then let's see, completed our Chime Core migration. So again, they are, slowly expanding, adding products, adding partnerships, right? And growing the business. And so I like to see that. So let's take a look at some of their financials. So again, delivered 29% year-over-year increase. I like that. Active members, this is obviously super important, right? A big driver of the business. You can see that in Q3, that was 9.1 million, up 21%. That's a lot of members being added. And then purchase volume is up 15%. You have average revenue per active member is up 6% year over year. That's also nice. Again, that's kind of showing that they are taking members that they already have, right? And they're getting them to buy other products or to sign up for other products, right? So I like to see that. And then we have revenue. So again, up 29% year over year. Gross profits up 29% year over year. Margins at 87%. Wow, not bad. Transaction profits up 20% year over year. Margins on that 69%, also not bad. And then adjusted EBITDA up 5% year over year. So moving on is their active members chart, right? I do think this is very important to see, and we want to see this continuing to grow. And I mean, for the most part, they're growing every single quarter, right? You can argue that these were slow growth times here, but you can see nonetheless, every single quarter they're adding more users, which is what we want to see, right? Obviously, this going the other way would not be good. This flatlining also would not be a great sign. So again, they're finding a way to, increase their brand awareness and to get people signing up with Chime. And obviously, whatever they're doing right, because the people that do sign up, they're staying with Chime, right? And they're using Chime only. I found this chart pretty interesting. You can see that, the first-time activation rates, lower CACs, and stronger monetization are driving faster paybacks. You can see where we're at now, where it's projected to go. So that's good, right? I always like to see projections. Looks like, based off of cohorts, apologize if I'm pronouncing that wrong, generates consistent and sustained transaction profits over many of years. So it's like, the longer they stay with us, the more money we're going to make with those clients, right? So, hey, that looks good. All right, so this next slide, we see continued consistent spending among our members, right? That's what we want to see. Purchase volume growth of 15% year over year. We kind of went over that. This is really just a chart showing that. All right, and then back to the ARPAM grew 6% year over year, right? We talked about that as well. This is really just a chart showing how it's growing. So you can see here that, Q1 we actually were a little bit higher, and then it looks like we're kind of flatlining. So that's something to take note of. But looking at this year over year, we are up I would like to see this increase a little bit more. This is really just feels like we're flatlining. So, getting this number up higher, that'd be something I'd want to keep my eyes on. All right, moving on, we have their revenue in millions, and this is broken down into two different segments. So platform-related revenues and then payment revenues. You can see that their payment revenues is their main stream of revenue, or has typically been, but you can see how fast their platform-related revenue is growing, right? You can see that it seems like it's starting to grow at a faster pace than what their payment revenue is. So that's cool, right? I mean, we want to see other segments really taking over some growth, and we keep mentioning how they are adding different products and different this and different that. So hopefully we start opening up some other streams of revenue. And over here where my picture is, where I'm covering it up, you can see that this is their guidance, right? So, this quarter was 544 million, expected to be around 572 million, which seems like a, pretty decent increase compared to what we've been seeing. It seems like we've almost been flatlined right here, right? We've been seeing like very little growth. So it looks like this next quarter, for whatever reason, they're going to jump a little bit more than what they have in the past. So we'll be curious to see if that actually plays out. Here's another chart of their gross profits and then transaction profits, right? Again, nice staircase up, steadily growing. And you can see down here their gross profit margins and then transaction margins staying pretty consistent. Looks like, transaction margins have maybe dropped a little bit, close to 10% to where we were last year. Be interested to see why and if they can get that back up. And then, gross profit margins, really nothing to complain about there. 87%. It doesn't get much better than that. Looks like they improved their MyPay loss rate. Anytime you're improving a loss rate, that's a good thing, right? So obviously we want to see that, continuing to go down. And it looks like their target is 1%, and they're super close to that. Then we just have their revenues, their losses, and then margin transactions down here. Here's a chart of their adjusted EBITDA, right? And you can see where they were in the past and then where they're growing now. So this is nice, okay? We were pretty much stuck in this negative territory, and pretty much all this year we've been positive. Q3 at 5%, so we're kind of flatlining, but again, based off of what they're guiding, it looks like we're going to take another jump up. So, whatever they're doing it right. At least it seems like they are. Yeah. And then if you want to take a screenshot, I'm not really going to cover this, but this is just showing what their guidance is for the quarter and for the fiscal year 2025. All right, so next I put together a few charts that I want to take a look at that are giving us some projections into the coming quarters. So I always like to see what's projected. You can see here, December 2025. This is what they've raised it to. That's on the lower end of what they raised it to. And then you can see the next quarter after that, expected to jump pretty substantially, and then just a little bit, and then a nice little jump again. Again, it's never a straight line up, even though here they're consistently growing revenues every single quarter, even though sometimes it's not as much as others, but we have not taken a dip the opposite way. I mean, a lot of times when you see this, right, you might have one bad quarter before it ramps back up again, but this is just steadily increasing. So I like to see that. The percent of revenue change right here is still looking good. Obviously, that's expected to slow down, which is normal, but 22% is still decent. And then you have the cost of sales. I like to put that in there as well, just to see how much it's costing them to make this revenue, right? Because they are at a net loss right now. And I don't see anything too crazy about this. They're like, yes, it's increasing, but not substantially, right? I mean, back in December 2022, it was 52 million, right? I believe that is, and we're at 69 now. That's not a big increase, so nothing to really be worried about there. And then so this next chart just goes over their operating profit and operating margin, so the core of their business. That's why I always like to look at this. And you can see obviously they're negative right now, so operating margins are negative as well, but I just wanted to kind of see where this was in the past. And if we take a look at operating profits, you can see that we had a ton of negative quarters in years, but we are projected, December 2025 to be negative again, but then to turn positive. So, and this is one of the key things I guess I wanted to point out, because again, with operating profits, we can look into the future. I can't look into the future of net profits, right? Because it's just hard to say, and this platform doesn't, offer that data. But what I can tell is that, revenues are continuing to grow. We don't see the cost of sales really growing much. And then we see that operating profits are expected to go positive. This gives us a pretty good implication that next quarter, we should be positive, right? Based off of the data that we're looking at, and based off of coming in with their EPS, negative 4 cents, very close to being profitable this quarter, higher than what was expected, raising guidance, looking at these projections here, I think it's safe to say that next quarter is probably going to be a pretty decent quarter. And when we look at the charts, we'll see what that looks like. But nonetheless, like I could see Chime getting a little bit of momentum going into this quarter. But then again, there's a really good chance that, the stock price will kind of trade flat until this quarter comes out and then investors get like confirmation like, okay, company's profitable. They're sticking to their guidance. Things are still looking good. Because at this point, I do feel like Chime is, pretty undervalued. And then as we were mentioning, the net income, right? This is a little choppy because Chime, just started to be publicly traded. So a lot of this data is not available. But nonetheless, I am comparing this to SoFi in this example just to get some type of perception, right? They are similar companies, both in the financial space. Arguably, SoFi, offers a lot more. But nonetheless, they started in the same industry, right? And Chime could also grow into the segments that SoFi is, and they're already into some of them. But, check this out, right? We're still negative, but you can see how often SoFi was negative, right? Before they finally went positive. And even then, we had like this big positive quarter and then back down, then back up. It's pretty volatile. But I guess what I'm really looking at here is, it's not like a huge difference, right? It just seems like it takes a little while for these companies to get up and going. And it just feels like that Chime's about to turn the corner and be profitable. And then the next chart here is the free cash flow. And you can see that we're also looking at some projections here. It's growing though, right? We had a big negative number of free cash flow, got a lot less. And then it looks like in December 24, we were positive and expected to be positive at the end of this year. But then look at this jump, right? So like I'm getting this common theme here, right? That 2026 for Chime is going to be a better year. And arguably, like their next quarter is going to be one of their best quarters. So, again, just something to keep in mind. That's why I like looking at these charts, going over it with you guys, because it can give us some indication of where the stock price could be headed, right? This is a longer-term outlook. The stock's going to go up and down every day. Who knows, right? But that's why I like to look at the fundamentals, because that paints the clearer picture. Price movement, it can be manipulated, this and that, right? At the end of the day, though, if the company keeps growing and keeps making money, it's just a matter of time for the market is like, okay, it's time, that this company demands a higher PE ratio, right? We got to start paying attention to it. They're doing something. People start jumping in, right? The stock starts shooting up. So overall, Chime had really good earnings, in my opinion. They beat expectations on revenue, on EPS. They raised their guidance. You really can't ask for any more than that. They're giving us a lot of insight of what's going on. It seems like they keep growing. They're adding partnerships. It seems like those partnerships are gaining traction. And again, I feel like one of the reasons why investors are still beating the stock up is because they are negative still, right? They're not making money yet. And, it looks like even looking at like their operating profits, that's not expected to be profitable, this quarter. But it does seem like everything into next quarter is supposed to be a lot more profitable. Like it looks like they're going to take a big jump, and I'm not 100% sure. Let me know in the comments if you know of what the reasoning is behind that. But based off of the data that we're looking at, what analysts are expecting, what they're guiding, it just seems like they're confident that revenues are going to increase a good bit, operating profits are going to increase a good bit, and it looks like they're going to be profitable. It looked like free cash flow is going to also increase a good bit compared to where it's been. So I think it's around the corner, but the market's forward thinking, and I believe, the fact that they're not profitable yet, it wasn't like some blowout earning that was just like, oh my God, like the guidance, yes, it was raised, but it wasn't like, oh my God, like that's like way more than what we were expecting. I think at this point, again, I think the stock could run up into next earnings a little bit, right? And then I think that's going to be the telltale of, okay, everything that they've been guiding looks like it's sticking, right? It's standing true. And then, of course, seeing what their guidance is at that point, if they're continuing to raise, I think maybe that gives investors a little more confidence. But nonetheless, what I'm seeing here, based off the fundamentals that we just looked at, it looks like they're about to turn profitable. And it looks like, the next quarter or two and into next year, they're going to see more growth than they've seen in the past, right? So that's pretty exciting. And you saw SoFi when it came out and had a very profitable quarter. The stock skyrocketed. and really has never come back down since then. So, hey, be curious to see what happens, but overall, a good earnings report. So, with that being said, let's go ahead and jump into the technicals and look at the charts real quick. And, honestly, this isn't looking too bad. Here, let me zoom out to the daily, right? You can see this is where earnings was, right? And it had like a run up after earnings, right? Kind of dipped after, but then actually ran up to this moving average line and then just got rejected, but the whole market got rejected. But what's happening here is you can tell that we are making a higher low, okay? We kind of bottomed out here. I feel like this was like a liquidity grab before we go higher, and then we're getting rejected off of this, but you can see that we broke this bearish pattern, arguably. We made it up to this moving average for the first time, though. We got rejected, and then again we're coming down and making a higher low. All right, so zooming out to the 4-hour time frame, you can see that we're forming a nice reversal here, okay? And we're getting some confirmation, but let's talk about it, right? So we have the sell-off, and this is a long time frame reversal, so that doesn't mean the stock's just going to shoot up anytime soon. Like, this is going to take a while to play out, ideally. But once we start breaking back above just how we got stuck in this downtrend, I could see this getting stuck in an uptrend, right? And finally getting some momentum and just working its way up slowly. And up until earnings probably, right? And then depending on how earnings comes out, maybe we go higher, maybe not. But nonetheless, so again, a very nice reversal forming here. You can see how we can't get above these moving averages, right? And then all of a sudden we break above it, we come back down, we retest, we come back up, right? And test this resistance up here. That's completely normal. And then we get rejected off it. The whole market was getting rejected though, right? So keep that in mind. It's not like it was just Chime. So honestly, for the fact that the market was selling off so hard, I mean, Chime didn't see like too much of a sell-off. Granted, the stock is beaten to hell already, so I wouldn't expect it to go much lower. But nonetheless, though, you can see that we're coming in here, we're making a higher low, right? And then we're breaking back up above, this high over here. We're getting back above the moving averages. Again, the level that we really need to break market structure and to be positive again and to have like some upward momentum where I think, hey, it's a lot safer to get into the stock now and just ride the momentum. We got to break about 21 bucks, right? 21.33, right around here though. You can see the previous resistance, and we went up here. We got rejected really hard off that resistance, right? We're working our way back up again. Once we break this, I think a perfect trade would be obviously you could start dollar cost averaging here. I think this is a decent time to dollar cost average. Buy some now, buy some tomorrow. If it drops, buy some more, right? I don't think that's a bad idea. You could also put your stop loss down below here if you're like, hey, if it breaks this low here, who knows how low we're going, and that's true. It's a new stock. You can tell that there is no other support that it can catch, right? There's nothing here. We're in no man's land. So, yeah, if we break this support, it's hard to say where we're going. But if you're like, hey, Jack, I really like this company, I'm in it for the long haul, yeah, start dollar cost averaging. I don't see anything wrong with that. I think this is going to be a nice trade, a nice reversal, in my opinion, and it's starting to play out. So, again, what you want to do on the other hand, right, if you want to wait for confirmation of the reversal, then I would wait to break this structure here, right? So we want to get up above 21. It's a chance that it just breaks up and goes up to these levels here, right? And then what you could do is just wait for a retest. So like this, right? You see how we broke up above here and we came back down to retest, this support down here, right? And now we're bouncing back off it. So same thing. Stock comes up, breaks this level, comes back down, retests this level, take a position there to go higher, right? And then you can put your stop loss right under there, because if we break back below, again, we're probably going to get stuck in this channel or possibly go lower. Nonetheless, though, I do think this is a good trade opportunity right now. Again, set your stop loss if you need to manage risk, especially if you need your money in a short term, or, you don't want to wait this one out, because it could be a little while, right? This isn't necessarily going to be a play that just pays off tomorrow, even though it could. I'm not saying it can't. And you can see today, we're up 5.5%. That's a pretty nice bounce off of these lows here. The whole entire market is up, though. So I'm watching these levels, right? Do we get rejected off these levels again? Go down and make a lower low? Hopefully not. But if we can break up above this level, I think we're going to have a nice little breakout. And then you can see where I have lines drawn on here, right? If you want to take a screenshot of this, this is where some of my key levels are where I'm looking, right? Again, if we get above here, might get rejected, come back down, retest the moving averages, or right here, right? So what I see happening, right, I'm watching this level here. We could come up here, get rejected again, but ideally we come back down, we make another higher low. This will probably be the support that I'm looking at, right? Resistance, resistance, resistance becomes new support. So I can see it coming up here and then boom, making a higher low to work itself back up again, right, to this level before it finally breaks it. When it breaks it, I think we're probably coming straight up to here. Just to argue exactly where that level is, right? But around here, 23, 24 bucks might be a good level. That's like that psychological number, right? A whole number. So that's another level that I'd be looking at. You can see here where we wicked up before we got rejected super hard. That was some serious resistance. You can see it was support before, resistance here. That would be my next level at around 26 bucks. And then if we break that level, we're coming up to about 28, 29 bucks. But overall, I think this is a great swing trade. In my personal opinion, I like SoFi stock better than this stock, but I think this is a lot more undervalued than SoFi is, and I think it has some substantial upside. But with that being said, this isn't something that I personally would probably buy and hold for a long time. I'd probably be looking just to take my profits at some of these resistance levels, right, and just swing trading it, making my money, getting out, looking for another opportunity. But hey, before we wrap it up, let's look at some price targets. We got 15 analysts covering this stock. That's actually not too bad for a newer stock that just IPO'd really not that long ago. You have the low in the street, 19 bucks, which we surpassed that already. I mean, we were trading around 16 bucks at one point. And then the average is 31 bucks on this stock, man. I mean, that's like pretty substantial upside. Let's just take a look at that real quick based off where we're trading right now. If it were to get back up to 31 bucks, right, back up to some of this resistance, that's 62% increase. And then obviously if we went back up and tested some of these highs up here, even more, you know what I mean, close to 100% return possibly. But this would probably be one of the biggest levels I'd be looking at. This if I hadn't already taken all my profits, this is probably where I would, just because you can see like that was a pretty major level, and once we broke it, that's where that bear trend really started. But hey, that's all I have for you guys in this one. I wanted to give you an update on the recent Chime earnings. I know this is a stock that I covered in the past, and I've had a few people ask me to do an update video. So here it is. Those are the technicals and the levels that I'm watching, where I would have my stop loss, went over some price targets, all that good stuff. If you're still here and you enjoy content like this, please consider subscribing to the channel, liking this video, and I'll see you guys in the next one.